Hello, people, and the bull run is back. Well, but there is one thing that could jeopardize it, well, at least delay it a little bit, and that actually has to do a little bit with why we actually dumped the last 2 days. And that is because the US dollar is strong, and specifically against the Japanese yen, they have a problem not with inflation, but with deflation. Yes, stuff costing less might sound good to you guys, but that also means economic activity is way, way down. People do not have any money to spend, unlike in the United States where consumer spending is still going up. And we still have inflation because, prices inflate when people buy more stuff. Prices tend to deflate when people don't have any money to buy stuff. Yes, there's all the whole, we're borrowing on credit and all that stuff, but honestly, Americans have always bought on credit. That's really nothing new. But Japan's economy is definitely in turmoil, and part of the reason is because the Japanese yen is very weak against the US dollar. How do you solve that? You raise interest rates. But that has basically very bad effects, at least temporarily, on crypto. Now, if I was a Japanese person, I would want them to raise interest rates because I would want my yen to stop deflating. And realistically, in the long run for crypto, that's probably good for Bitcoin because that means the dollar index is going to go down. Right now, the dollar index is 104, which is still very, very high. The dollar index needs to be around 95 or maybe under 100, but around 95 preferably for crypto to grow the best. And as long as the Japanese yen's weak, we can't get to that 95 number. However, if you're really in a rush to get a bull run, you don't really want Japan to raise interest rates. You're like, well, it's Japan. Who cares if they raise interest rates or not? Well, you care because that's because the fat cats on Wall Street completely depend on the Japanese yen carry trade. And of course, that depends on a low rate. Now, many of them are kind of stuck in there. They haven't adjusted. And if Japan raises rates, especially if they do it very quickly, it'll wipe out that whole yen carry trade, which will get them a lot out of the market, which will lose them a lot of money, which will actually hurt the overall market, which then will hurt crypto, unfortunately. Remember, the last time Japan surprise raised rates, we actually went down to 48K. That was pretty much the reason we went down to 48K. And we could see not 48K because I think people are more braced to this, but at least a substantial drop below 65K at least if they actually raise rates once again, or they raise rates very quickly. Now, there's two sides of this. Their new PM at the beginning of October said we shouldn't raise rates too fast, but just today, their central bank administrator basically said we shouldn't raise rates too slow. There needs to be a balance. In fact, the Bank of Japan chief warns risks of raising interest rates too slowly. Bank of Japan Governor Kazuo Uda on Wednesday warned the risks of moving too slowly and raising interest rates. I think that's part of the reason why the Dow actually went down 500 points today, obviously. Because, like I said, a lot of the Wall Street traders, they depend on the Japanese yen carry trade. And if they raise interest rates, they might have to go somewhere else, and they don't really know where that somewhere else is. But he said it would be problematic if you proceed very, very gradually and triggered expectations that interest rates will stay at low levels for a long period because they really can't afford to have the yen just be weak basically forever. The yen does need to be stronger. And so the interest rates do need to come up. This could lead to a buildup of huge speculative positions, which could become a problem later, he said. We need to strike a balance between the two. He also said it is still taking time for Japan to achieve the BOJ's inflation target in a sustainable manner. His remarks come after the US dollar hit a 3-month high against the Japanese currency, briefly entering the 153 yen range. The yen's continued weakness, which has increased import costs, reflects expectations that the interest rate gap between the United States and Japan will not narrow significantly anytime soon. But the US is going to drop interest rates, hopefully quickly, because that would actually help Japan as well. And Japan's probably going to raise them, which will narrow the interest rate gap. I think Japan is still at 0.5 or something, or 0.75 or whatever, whereas the US is at 5 right now still. Well, 4.75 to 5 right now. So there's still a huge, huge difference. That needs to slim down very quickly. So we either got to drop the interest rates or they got to raise them, or perhaps a bit of both. But like I said, them raising the interest rates kind of screws over the yen carry trade thing, and that hurts a lot of Wall Street people, and that will actually have a contraction effect or a shock effect on the overall American economy, which will bring down crypto at least temporarily. Now, how long do I expect it to bring crypto down for? Probably not more than a few days. So if you want one more buying opportunity, this is good for you. But this could be something if they keep on continuously upping rates in the future. This definitely could be something to watch and could delay the bull run by a few days to a couple of weeks, which is not good for us. I still think after the election we're going up no matter what, but this is something to watch on the horizon when they start raising interest rates. Of course, when we start lowering interest rates as well, but when they start raising interest rates, because each rise can be a shock to the overall market and could have a temporary pullback. Like we go up to 80,000, a raise on their interest rates might bring us back down to 75. So watch for those dip chances. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.